Welcome to the B.F. Anderson Technical Report for January 21st. The January barometer, it's a barometer indicator that's been around for years. The Yale Hirsch organization first started back in the 1970s. Basically what it says is that the way that January usually goes, the rest of the year goes the same way. So if January is up, the year should be up. And there's a lot of statistics on this, and there's also some reasons why that might be a valid indicator. If you look at this right here, we had a Wall Street Journal survey where a group of economists basically said that they're looking for U.S. economic growth will exceed 4% in 2021. COVID-19 vaccinations and additional government aid boost the 21 forecast by economists. So what happens in January is a lot of economists come out with projections, a lot of analysts come out with earnings projections on individual companies and industries in the month of January. So if the month of January is up, it kind of tends to say that these reports in aggregate are positive. If the January is down, the reports are negative. But so far, January looks pretty good. Now let's get down to the business at hand. This is the NASDAQ breaking out to an all-time new high, very solid uptrend. Things really look good on this particular indicator, which is the 25-day and the 50-day moving average. We're staying well above the 50-day and we're above the 25-day uptrend, very positive. Here's the weekly indicator where we're looking at the 35-week moving average, which continues in an uptrend, which tells me we're in a bull market. Here we have our high-low, New York high-low indicator. You can see we're hitting a lot of aggregate new highs. Actually, the new highs are hitting a new high on the 10-day moving average, and you can see here the index continues to perform well. Now, the new lows, no problem. We're not seeing anything above 40. We're seeing a very constructive amount of new lows, no problem, nothing to worry about. Now, on the 10-20, which is the 10-month versus the 20-month moving average, new high, looks very positive. We're on a golden cross, and in fact, the spread between the moving averages is starting to increase because the shorter-term moving average is moving up faster than the long-term moving average. Same thing for the NASDAQ. Golden cross, new high. Here we have China. Look at China. China's really broken out here in a big way. Lots of white space in here. Very positive. China has momentum. Now, on the aggression index, understand what we're doing here with the aggression index. What we're trying to measure is something called animal spirits. In other words, are investors willing to be aggressive, which means they're buying the NASDAQ composite over the consumer staples. In other words, they're buying technology instead of buying soap and toothpaste. Now, the actual indicator looks actually hitting a new high here where we use a 40-week moving average, continues to stay above that, very positive. So the aggression index is nothing but positive. Now, here's our three economic indicators. You can see interest rates kind of popped up above 1%. We're kind of stabilizing. We're getting close to 1.2. It does look like interest rates are creeping up. You're seeing the price of oil moving up. Price of oil currently at $52.98 a barrel, West Texas Intermediate, looking better, which means economic activity. And the financial stocks look pretty good as well. Now, we'll get a little bit more into that into the video. Now, on the two other indicators we use for the S&P would be the 25 and 50-day moving average. And just like the NASDAQ, very positive, breaking out to new highs. Here's the 200-day moving average, well above it. Good amount of white space in here. And it's breaking out to an all-time new high. Now, that's the S&P. Now, as we look at the put-call ratio, which is a measurement of fear and a measurement of greed, you can see we continue to be in an excessive greed situation, which could indicate the possibilities of a correction in the market. We'll just have to see, but my experience with this particular indicator is you can stay in greed for an extended period of time, and you can stay in fear, like back here, an extended period of time. So it's important, but it's a secondary indicator. Here we have the volatility index. Again, we're seeing volatility coming down. That has a lot to do with the optimism out there because when the market is stable and there's not a lot of volatility, it's going to pull more people in, therefore more optimism, and therefore more greed. Now, I just wanted to go over a few indicators that I'm noticing. International, this is the Dow Jones Global Index. You can see what's happening here. Since March 23rd, the global stocks have really rallied, and they're making an all-time new high here, which looks very good. So international stocks are starting to outperform, which is positive for everybody. Now, here we have three groups that were looking interesting this week. We have energy here. The energy stocks are looking in an uptrend. We've got the financial stocks looking good in an uptrend. And then we got the materials. This is materials, things like metals and industrial products here in an uptrend as well. These are three areas that have recently strengthened. Now, this is what we call a thrust indicator. What I have here is the NASDAQ percent of stocks above their 200-day moving average. So what percent? So up here would be 100%, down here would be 0%. So what we're looking for is how do most bottoms look and how do most tops look? Well, you can see here that since 2002, we've only had 3 times that we've got this particular buying thrust, which is we come down to a very low reading of 10%, meaning 90% of the stocks are below the 200-day, and then we immediately rally to above 75% of the stocks above their 200-day. So it's happened one time, it's happened a second time, which was the bottom in 09, and it's happening again. So what we're getting here is what we call a thrust indicator, very rare, only 3 times in the last 20 years. Now, we also did the same indicator for the S&P 500. Again, you can see big sell-off, market makes bottom, we get the thrust, then you can see the market continues in an uptrend. Again, we get the sell-off, we get the thrust, market continues in an uptrend. So basically, a thrust is a way to pretty much say the market has made a bottom. Now, we'll get into the top 5 here. Here's Freeport-McMoRan. This is a company that is mainly involved in copper. As we have discussed in the past, as we transition to more electrical devices, battery-powered devices, such as automobiles, it's going to take a lot of copper. So copper has been in a pretty strong uptrend. General Motors, goodness gracious, we just got this one added to the list. We do own the stock. We also own Freeport-McMoRan. But you can see here, General Motors hitting an all-time new high. They just signed a deal yesterday with Microsoft over their Cruise division, which has to do with autonomous driving. Here we have Grow Generation, which is a company that sells the picks and the shovels to the marijuana growers. If you're growing marijuana, you go to one of their stores and buy all your equipment, whether it's hydroponic or aquaponic. But you can see it's holding that 10-day moving average, pulling it back a little bit today, but actually is in a very constructive uptrend. Here we have Kodiak Sciences, which is biotechnology. They have to do with, eye technology, helping with the human eye. You can see here that the 10-day moving average has turned up. Stock is in somewhat of a positive uptrend. Here we have Roku, which is TV streaming. They pretty much dominate the TV streaming business, and there's a lot of other things that they're capable of getting involved in, such as movie production and so forth. But Roku is looking very positive. You got a nice gap up buy signal here, continues to stay in a strong uptrend. So Roku looks interesting. So that's it. If you have any questions, please give me a call. Thank you very much.